In the latest release of Dynamics AX 2012, we have invested a lot to make projects easier to use in multi-company scenarios. We enabled users to report time against projects in other legal entities, resource projects with employees from other companies, and allowed legal entities to invoice each other for time, employee expenses, and vendor expenses. Before we go any further, let's take a look at a typical scenario that illustrates how intercompany billing works in Dynamics AX at a high level. This graphic basically shows a project with and a contract with an external customer that's being held by the U.S. legal entity, the CLE, also known as the contracting legal entity. Resources in the other two legal entities, or as they are referred to as RLEs, enter timesheets against the project in the contracting company in the U.S. legal entity. However, there is no intercompany revenue or cost being recorded immediately. Instead, the resourcing legal entities periodically generate intercompany invoices for the CLE or the contracting company for the time and expenses recorded by their employees. When this intercompany invoice is approved and posted, it generates a corresponding or a matching vendor invoice in the contracting companies. When this vendor invoice is finally posted, the cost is then recorded against the actual project in the contracting company and subsequently is available to be invoiced to the external customer. Let's look at some additional terminology that's being used in the product. A lending legal entity is an entity that provides the service or product to other entities. Sometimes this lending LE is called the resourcing LE or RLE for short. A borrowing legal entity, on the other hand, is the recipient of the service or product and actually holds the contract with the end customer. Hence, it's referred to as the contracting or the CLE for short. An intercompany relationship is a relationship that is held between two entities. And in this relationship, the borrowing LE or legal entity is configured as an intercompany customer in the lending LE, and vice versa, the lending LE is configured as an intercompany vendor in the borrowing LE. An intercompany transaction is a transaction that's recorded on behalf of another company, and this can be a timesheet, an expense report, or a vendor invoice. An intercompany customer invoice is an invoice document that is generated by the lending legal entity for services rendered on behalf of the borrowing LE. And hence, it's called an intercompany invoice or IC invoice. An intercompany vendor invoice, on the other hand, is the invoice document that is auto-generated by the customer, by the RLE on the contracting side. And that is the invoice that's basically, when it's posted on the contracting entity side, it will actually record the costs against the project on the contracting company. Now that we have the terminology defined, let's look at the steps required to set up the intercompany billing in Dynamics AX. Some of the setup parameters that you will see in the software relate to defining default categories, accrual of revenue, currency setup, and indirect costs and taxes. Also, another important setup parameter is that of intercompany transfer pricing. The transfer pricing is set up between the two companies and will depend on the type of services that they are exchanging. In this release of AX, we are supporting 6 transfer pricing models. One that's based on quantity, and the second is based on an amount that is above the cost on the RLE side. The third is based on percentage. And the last 3 are based on the sales price percentage or an amount below the sales price that is set by the contracting company. Let's look at the software now and see how some of these parameters are used. So starting with the customer record, Here we see the French subsidiary, in this case, the FRSI, is being set up as a customer on the USSI legal entity side. If we go to the General tab and click on Intercompany, we will see here that there is a trading relationship that has been established between the USSI, the lender or the provider of the service and products, and the customer here, which is the FRSI. Once you have that trading relationship set up, now we switch to the project module and we look at the Intercompany tab in the project management and accounting parameters. Here we see that we have the FRSI being added as a borrowing company. We have selected the accrue revenue checkbox, and we have defined a default timesheet category that we could basically use if the project categories are not shared between the two entities. The third component that you need to ensure you have properly set up is the transfer pricing. So here we have three documents with three transaction types, and we have the FRSI as the borrowing legal entity. We have indicated for the transaction type of type hour. We have a quantity-based transfer pricing model, and we are lending our resources to FRSI at $200 per hour. For the expenses, we are using an amount that is basically, we're passing through the same cost that we are incurring on the lending side. So as you can see, charges amount is 0, so we're not adding any markup. The third type is the vendor invoice line here, and we see that we're charging 10% markup for all our vendor expenses. So that's all the setup you have to have on the lending side as far as the operational parameters. The last step is you have to check is on the accounting ledger posting. And you can see here that we have an intercompany cost parameter, account mapping, posting type, that is actually used on the borrowing side. Here on the lending side, you have to set up the intercompany revenue. This is where all the intercompany revenue that's being generated by the lending LE will go to. If we switch to the borrowing entity, FRSI, and we click on the project management and accounting parameters, if we check the intercompany tab, we will see that we have a default category. Now we need this because the matching vendor invoice that will be generated when we post the intercompany customer invoice will need to have a procurement category, and that is the category that we will use. Basically, that is all the setup that you need to have the intercompany billing operation ready to go.